Hey guys, welcome back to the channel. Today I will share with you EURUSD analysis from a fundamental and a technical perspective. From the previous analysis that I posted, it was on September 18th, before the FOMC meeting, and our expectations were that the price was going to create the reversal near to 1.12, 1.1270. As you can see from the chart, this is crystal clear. The price increased, tested the structure zone near to 1.12. The maximum was reached at 1.1215 and later it moved down. So here we are in this part here, and the price already moved down nearly 200 pips in this area because we are on the daily chart. As you can see, the price is still moving up and down in this big range trading. However, we should not expect the price to continue moving down in this way like it did before. However, we are expecting a bearish movement, as I explained also before. We are ahead of the fact that despite the FOMC decreased the interest rates by 50 basis points, there was nothing bad in their decisions because all the major economies are going to decrease rates, otherwise they can create bigger problems on their economies. And it is not a bad thing because it will give breath to the businesses in order to pay less fees with loans and also to increase the businesses by taking loans. So this is one of the reasons that we can see the price moving down. At the moment that the price stopped in this area was a bit confusing overall because all the market was focused that the Fed is going to cut the interest rates further during the coming meetings. It was expected by 0.5% or 50 basis points, and the price was going to explode. However, as I explained also before, the US economy is still very strong, and despite the fact that Powell made that very clear, the market didn't react it so clearly during the previous times. But later, it was also expected Powell's speech, and I want to point out some comments from his speech when he discussed about the US economy and the outlook on the future rate cuts. He explained the same things that shared during the FOMC. He said that we have made good progress toward restoring price stability without painful rise in unemployment. A 50 basis point rate cut reflects growing confidence that appropriate policy recalibration can maintain labor market strength and inflation moving toward goal. Colleagues and I have great confidence inflation is on sustainable path to 2%. Labor conditions are solid, labor market roughly in balance. Annual GDP revisions were quite interesting. Another one from his comments was that the labor market may give a better real-time picture of the state of the economy, and the Fed is not in a hurry to cut rates quickly and will be guided by data. So that is why we had this strong bearish wave, but it should have happened from the FOMC meeting because these are all the same data. And in my opinion, I don't think that Powell changed his mind or the Fed representatives. These are the same comments. Is very consistent in his comments again. And I think that the price has chances to move down further. So from this perspective, when the price tested from a technical point of view, when the price tested the top of the pattern, that is this area here, we saw the price moving down from this double top pattern. Price faced a strong resistance and here began the bearish movement. But another factor that we are looking at is the fact that 1.12 was a very strong zone detected as a very strong resistance also on the past if we are going to refer to the daily chart. So it was only a small difference and the selling pressure was growing here. Actually, we are near to a very strong zone. We have to be careful. Look at on the daily chart where we are right now. Everything is related to the speculation about the non-farm payroll data that we have today. Considering that also the ADP data came higher than expected, this is raising the chances that also the non-farm payroll data can be higher than expectations. However, during the previous months it was 142k. Today is expected to be 140, but considering ADP data, it can be even higher. And on the average hourly earnings, this time is not expected any change on the yearly basis, but on a monthly basis is expected slowdown. However, we should take in consideration that these are the September's data, and the odds are higher that both indicators may increase more, because it's the moment that everyone wants to begin working after a long summer holiday. So let's see what is going to happen. For the unemployment rate, it is not expected any change. So these are the most important news for today. So all the focus will be mainly on the non-farm payroll data. Considering the current price zone, we have to be very careful because it has room for interpretation at this moment. The price has been stuck between these 2 points and is expecting only for the news. We have the structure support that stopped the price, and for a bearish continuation movement, the price has to break below 1.1. That is also a very strong psychological zone, and later it may continue with the other targets. So the first target that we are expecting, if the price will break down 1.1, is going to be 1.08. However, if you want to be more conservative, you can take in consideration also 1.09, as long as the price is reacting to the round numbers. But in my opinion, it should stop on the next structure area. So everything is related to the news. The problem is that this structure, according to the news, can push also the price up, and it can test 1.12. However, considering that we are only in a speculative moment, we have to be careful, because Powell made it clear that they will not rush to cut rates by 50 basis points. So the chances are that the FOMC during the coming meeting may cut rates by 25 basis points. And in that way, the odds are that the price may increase and may decline later, or it can make something strange in this area if the non-farm payroll data will come lower than expected. However, overall, I'm still bearish on EURUSD. I'm not bullish on this currency pair, but for the moment we have stuck in this pattern that, as usual, is still showing many possibilities ahead of FOMC. The problem is that every time that we have a FOMC meeting, the price is only driven by the fundamental perspective, so only by the news. But in my opinion, it should begin moving down soon. On the other hand, we have also the dollar index. If we are going to refer to the dollar index, some times ago I posted this analysis on September 9th. The price was showing this combination of harmonic patterns, and as you can see from this area, after the price tested several times, increased again. It was a very dense area and it was without direction after the FOMC, but so far the price already reached the first target and it is getting ready to rise again. The pattern looks solid for the moment. We have also a breakout from this area, so this is suggesting more that the dollar may get stronger, considering that the dollar index is making an attempt to rise further. However, everything will be related to the news again, so I'm using dollar index only as indication this time, for just for an idea, not for direct trading Euro USD, but this is showing that the USD bullish volume is growing further. The pattern may work out well, considering that it's a very strong pattern. I have shared this pattern also before, so look at the strength of this pattern. It worked out well. It was the same pattern that was completed here, but it spent more time before the bearish movement, so look at how the price tested the top and then moved down again. So that is why I think that the chances are that we may see a stronger dollar. However, one step at a time, as I explained, for the bearish movement is required a breakdown through 1.11. So I hope you guys enjoyed the analysis. Thanks for watching. Please don't forget to hit the like button and follow. Bye bye.